What is up? Welcome back to the channel. Today we're taking a look at the 10 worst corporate accounting scandals ever. If you enjoyed today's video, then be sure to leave a like and a comment, and also subscribe. Also comment down below letting me know that you subscribed so that you can automatically be entered into this month's shoutout giveaway. Coming in at number 1, we have waste management scandal. If you're not too familiar with the company Waste Management, then they're the ones in which a lot of other companies rent garbage dumpsters from for their business. They're also the ones who collect most people's trash from their homes. So Waste Management's job to collect the trash from these dumpsters and from all their customers on trash day. However, while in a weird way some may view this company as a hero, considering they help keep trash out of the street, they're not the angels you may view them as. Waste Management allegedly falsely increased the depreciation time length for their property and equipment on the balance sheets, and also reported fake earnings of $1.7 billion. Coming in at number 2, we have Enron scandal. Enron is a Houston-based commodities, energy, and service corporation who was ran by both Jeff Skilling and Ken Lay, who were both CEOs of the company. However, in 2001, Enron was caught keeping huge debts all from their balance sheets, which made their stocks drop drastically and made shareholders lose over $74 billion. After the scandal, Jeff was sentenced to 24 years in prison. However, Ken Lay died before receiving his sentence. Coming in at number 3, we have WorldCom scandal. In 2002, WorldCom, which was a telecommunications company now known as MCI Inc., was caught by their own internal auditing department inflating assets by as much as $11 billion. Due to them being caught, over 30,000 jobs were lost, and investors lost $180 billion. The CEO of the company, Bernie Ebbers, was then sentenced to 25 years in prison for fraud. Coming in at number 4, we have Tyco scandal. Tyco is a blue-chip Swiss security systems company who in 2002 was caught for inflating company income by $500 million, in which the CEO, Dennis Kalosky, and CFO, Mark Schwartz, stole $150 million of by disguising the money as executive bonuses and benefits. After the two was caught by the SEC and Manhattan DA, they were both sentenced 8 to 25 years in prison, and Tyco had to pay investors $3 billion. Coming in at number 5, we have Health South scandal. Health South is the largest publicly traded healthcare company in the United States. CEO at the time, Richard Srushi, was caught selling $75 billion in the company's stocks the day before reporting a huge loss that would make the stocks plummet. On top of that, Richard also had his underlings to make up numbers and transactions from 1996 to 2003 so that the stocks would get super high and he could sell them. Richard was then sentenced, in which they forgave all 36 accounts of fraud However, he still served 7 years in prison for trying to bribe the governor of Alabama. Coming in at number 6, we have Freddie Mac scandal. Freddie Mac is a federal-backed mortgage financing company in which all of the main leaders of the company, including the company president David Glenn, was caught misstating $5 billion in earnings. Through a SEC investigation, the leaders of the company was then fined $125 million and were all fired. Coming in at number 7, we have American Insurance Group scandal. In 2005, American Insurance Group, which is a multinational insurance company, was caught doing massive accounting fraud, from bid rigging to manipulating stocks at nearly $4 billion. The CEO was then fired, however faced no criminal charges. Coming in at number 8, we have Lehman Brothers scandal. In 2008, the Lehman Brothers, which is a global financial service firm, hid over $50 billion in loans that they disguised as sales. The company was caught when out of nowhere they went bankrupt, which was an instant giveaway. Because how could a company that has $50 billion in sales go bankrupt? However, no charges was filed due to the lack of evidence. Coming in at number 9, we have Bernie Madoff scandal. In 2008, Bernard Madoff, which is a Wall Street investment firm founded by Bernie Madoff, tricked investors out of $65 billion. Madoff was caught when he told his sons about his scheme. His sons then reported him to SEC, and he was arrested the next day, where he was sentenced to 150 years in prison plus $170 billion in restitution. Coming in at number 10, we have the Satyam scandal. In 2009, Satyam, which is an Indian IT service and back office accounting firm, was ran by founder and chairman Ramalanga Raju, in which was caught falsely boosting revenue when he admitted to it in a letter he wrote to the company's board of directors.